Resource Watch is brought to you in association with Tebe Investment Corporation.
Hello and welcome. Exciting news from diamond producer De Beers. The precious stone is back in vogue. I'm Nozi Pombandra and this is Resource Watch. Let's kick off with the market wrap for this week.
The copper price has spiked again, this time by as much as 0.6% with the revision of supply expectations. This as some of the world's largest producers closed mines in Chile due to flooding. The market is entering a peak consumption season in the Northern Hemisphere. After several months of negotiations with some of the country's top international mining firms, Zambia's government has announced changes to a controversial mineral royalty tax. Zambia will temporarily revert to its 2014 mining tax code until a more amicable agreement for both sides can be reached. And the COO of South Africa's Chamber of Mines, Roger Baxter, says talks of strategic minerals and export restrictions kills the investment model for coal mining investment. He says if investment is not forthcoming, it would threaten supply security for 5 or 10 years down the road. South Africa is finalizing its minerals bill, considering declaring some minerals strategic.
Now, the world's largest producer of rough diamonds, De Beers, is bullish about demand for the sparkling stone this year. It recently announced that it expects demand for diamond jewellery to match the 3% growth of last year, to reach a new record of $81 billion. Now, CEO Philippe Mellier joins us on the line from London. Philippe, thank you so much for making the time to join us. Give us a sense of what's driving demand in the market at the moment.
Okay, the demand grew, as you said, by 3% in 2014, and the biggest driver was the US, because the US, which is the first market in the world, with a 42% market share, grew 7%. It's the most mature market, but it's still the market growing the fastest. The second market in the world, China, with around 16% market share, grew 6% last year. It's maybe slightly less than what we were enjoying before. The selling season was a bit weaker than expected, but still 6% growth is very important. So the biggest market in the world, US and China, grew way over the average of 3%. It was a little bit compensated, unfortunately, by some losses in dollar terms in India and Japan. The local sales went up in local currency, but were down in dollar terms because of weakness of the currency. But all in all, I think the big engine, US and China grew the market, and it was really pretty good and securing for us.
Philippe, let's maybe go back to the US and take these markets one by one. Are you seeing that, one, the US consumer confidence is going up and the economy, of course, is also improving? But are you watching the interest rate movements, and do those impact the demand for diamonds that you might see in that market?
The US market is the most mature market for diamond. Diamond have been very popular for the last 70, 80 years. And the middle class income is growing. The energy prices going down is also giving the middle class more disposable income. And diamond jewelry especially have been very, very popular in the US. So the micro economic environment plus the local situation, the growth in disposable income are very favorable factors for diamond jewelry in the US. This is why it was the highest growth last year. So difficult to compare with gold and platinum, which are used in settings, but in terms of diamond jewelry, clearly it has been a very good year, and in the luxury category, diamonds have been very popular in the US last year.
Let's go to China for a moment, where you have seen growth, but it's slower growth than you've realized in the previous year. What are your key concerns about the Chinese market?
China saw a few challenges in 2014. The first thing was clearly a little bit of a slowdown in the economic growth, which had a little bit of an impact from a macroeconomic point of view, for sure, difficult to ignore. The second thing, which also had a pretty big impact, was the 3-4 months of protest in Hong Kong. A lot of the Chinese customers look at diamond jewelry in China and go outside of China, mainly in Hong Kong and Macau, to buy, because taxes are lower and they are more affordable. And for close to 3 months we had big protests in Hong Kong which prevented the Chinese tourists to go into Hong Kong to buy. Most of the center of Hong Kong was closed. So it was also a pretty big factor to lower, unfortunately, the sales of diamond jewelry in China. So soft macroeconomic conditions, softer than expected maybe, plus the protests were clearly factors which clearly lowered the expectation. But the New Year selling season around a month ago was not that bad, in line with our expectation, and I think we should see at least the same type of growth, maybe slightly better in the Chinese market for 2015.
Philippe, emerging markets are often synonymous with high growth, and I know that you do have a captive market in India. Talk to us about some of the emerging markets that have really outperformed for De Beers.
Yeah, in India, the market started the first half of 2014 a little bit slow, but picked up nicely in the second part of the year for Diwali and the wedding season. It was clearly too late to have a big jump in a big increase in local sales, but at the end of the year we had a few % increase in rupee terms. The problem was the weakness of the rupee against the dollar. So if you translate the sales in dollar, unfortunately it was a small decrease over year, despite the fact that in local terms it was a small increase in rupee terms. The trend is moving quite nicely into 2015. We have a stabilization of the rupee against the dollar, so we believe that in 2015 we should see some real growth in dollar terms in India, and it will be the first case for just 2 or 3 years. So it could be the good news for 2015. Too early to tell, but the prospects are there.
And how well is the diamond polishing business in India? Are we seeing growth on that front?
As you know, most of the diamonds are being polished in India, and Mr. Modi, the Prime Minister of India, is coming from the Gujarat region where all the diamond industry is located. So Mr. Modi has been working with the industry to try to improve its position and to grow this business by creating a free zone, for example, and to work on taxes to encourage the business to grow. It happened at the very back end of last year, and we strongly believe that the full impact of the new measures introduced by the government in the budget for 2015 will start to have a positive impact on the diamond business in 2015. Definitely, India is a market which is going to grow with a much stronger support from the government than before.
It would of course be amiss of us not to talk about Africa and the initiatives that are on the ground to make sure that the end user market, that we increase transparency on that front and where the sources of the diamonds are coming from. Let's talk a little bit about that and the kind of progress that we've seen in terms of bringing transparency into the African market.
The African market in terms of sales are pretty small, unfortunately, but the Southern Africa markets are very important from the sourcing point of view. As you know, we are very present in South Africa, in Botswana and Namibia, and we are working very closely with the local government to develop beneficiation. But these are not markets for final jewelry. This is to create employment and wealth in the country within which we are working.
And how are you doing on the beneficiation front? Have those discussions with the government progressed? And are you at the point where you could say that you are a full participant in the beneficiation process?
I think we are more than a full participant. We are promoting it. We are pushing it, and we are talking very closely with our customers, we call them site holders, for them to invest into the producing countries with local employment, with cutting and polishing factories, or even jewelry units. This is clearly something which is very close to the DNA of De Beers. We always believe that by mining diamond, we need to benefit and we want to benefit the local communities. And we do that all over Southern Africa, as I said. South Africa clearly was very strong and has been there for many years. And we have also launched the same similar initiative in Botswana and Namibia. I think we are successful and we are encouraging, and our site holders are investing in these countries to promote employment.
Philippe, thank you so much for making the time to join us. That's the CEO of De Beers, Philippe Mellier, talking to us from our London studio. And here's a look now at our gem of the week.
Platinum is one of the most rarest elements in the Earth's crust, and because of its scarcity, a limited amount gets produced every year. This valuable commodity is the least reactive metal with a high resistance to heat and corrosion. We spoke to one of the country's leading jewelers to find out more about the complex manufacturing process of this precious metal.
So we buy the platinum in its pure form, which is 100%. We alloy it down to 95.2% pure platinum to make it more malleable and jewelry applicable for the different application. So we alloy the metal in-house, and we're using various technology. We're using laser technology for welding, for engraving. We're using different set of tools, different gas flame, different temperature. And once you need to understand the metal and how to work with it. And once you do, I think it's a very nice metal to work with, because for jewelry and diamond and gemstones, it is the best metal and the preferred metal to use.
Due to its high cost, platinum manufacturing remains an elitist sector, and unless industry knowledge and high-tech equipment are made more accessible, smaller jewelers will remain sidelined in this high-end market.
For South Africa in general, because we have 80% of the reserve of platinum in the world, I think one need to look at investing in the right technology and the right skill in order to create more local production that can export from here, and also create more artisan working in it. And one of the ways to create technology hub and service hub to allow people to use those services, because for the smaller companies, it's very difficult to invest a lot of money in technology. But if you do have the hub, it can basically service a lot of people around it. And I think that's a very effective way to grow the platinum production locally.
From deep underground to gracing a well-manicured finger, platinum undergoes quite the journey. And for those who can afford it, that old line, "All that glitters is not gold," takes on a whole new meaning.
And that's it for this week's show. Thank you so much for staying in touch. Let's keep the conversation alive. Follow me on Twitter @TheRealNozi. And don't forget, our hashtag is ResourceWatch.